Good morning and welcome to today's webinar. We're going to be having a look today at why finding out about your having a healthy business and why that's more important than saving tax. And we're going to look at 7 specific questions you need to be asking. 7 questions you need to ask about your business that are more important than saving tax. We're going to just remind everybody that this is general advice, general information only. Please don't use that as a substitute for professional advice. By all means, use the information and think about it, but get professional advice for your specific circumstances. So a little bit about me. I'm Paul Sweeney. I'm the founder of Predim Solutions Proprietary Limited. I'm focusing on business growth. So we specialize in helping businesses to grow. I've been working with businesses just like yours for over 25 years. So what are we going to be looking at today? So we need to find out why having a healthy business is more important than saving tax. And we're going to look at 7 questions. The first ones I want to look at is focusing around tax, but also I want to talk about our obsession with tax and why are we obsessed with it and how can we benefit from this obsession. But I want us to move on from that and start focusing on the things that are really important to your business. So how do we determine where to focus for your business, and what can we do to do things like reduce dependence on things like stimulus packages and government incentives, tax savings? How do we actually build a more sustainable, more profitable business? And when we talk about that, you'll be interested to know what are some ways that you can get some quick results. So we're going to give you a few tips there on how to get some quick results for your business. Some of the things that will get you the most gain in the shortest amount of time. And then we want to talk about how do you know if it's working. It's all good and well to do these things, but you need to know, are you actually getting the results you want from your actions? So we're going to have a look at those things, but we will start with looking at that question that I asked earlier, is why are we obsessed with saving tax? Well, it's a fairly natural thing that, taxes are what we pay for a civilized society. And we all recognize that, but we don't want to pay more tax than we have to, that we legally have to. So we are, I guess, we've become obsessed with a way of finding more ways to save on tax. We don't want to pay tax, so we can look at ways to avoid tax. How we can use all the deductions, incentives, schemes available that are legal to save the amount of tax that we pay. And yeah, that has become, I guess, a national sport in Australia, is saving tax and getting your tax deductions. We often talk about how much tax we've saved, and that's all good, but let's put tax and compliance activities, well, often centered around tax, back into perspective. They're things that are necessary. We have to pay tax. We have to comply with laws. We just have to do them. If we don't, there are consequences. So our time is limited. Our resources are limited. And when we devote time to saving tax or focusing on tax, it consumes the amount of time we have available for other things. Look, if we don't spend the time doing the tax and the compliance matters, there are consequences for not meeting our obligations. And they can be in the way of late payment penalties, interest, fines, and they can even get more severe. There can be penalties preventing you from running an organisation, or even in extreme circumstances, there can be jail terms. So we do need to make sure that we do them. They are necessary. But let's talk about how we can move on from that position of focusing only on tax. And I want to give this a very simple example of why paying less tax is not always a good thing. So why would I say that paying less tax is not good? Well, let's look at this example. So it's a fairly simple example. We have 2 similar businesses, both paying the same tax rate, and let's assume it's 30%. So that means the blue piece of the pie is tax, 30%, and the remaining 70% is profit. So what's left over after paying tax. So all looks good. Two businesses the same, that's fine. So one is paying $300 of tax and one is paying $3,000. But if you've already worked out the maths on that, if the tax rate is 30%, then the one paying $300 has a much smaller taxable profit. The one paying $3,000 has a higher taxable profit. So the one paying $300 of tax, so we're paying only 10% of the amount of tax of the competitor, but their profit after tax is only $700. Competitor is paying 10 times the amount of tax, but their profit after tax, so what's left over for them is $7,000. So the question is, which would you prefer? Would you prefer the $700 or the $7,000? If I put that question to you in terms of how much tax would you prefer to pay, $300 or $3,000, most people would have said $300. But if I put it the other way around, looking at how much profit would you prefer to have after paying tax, you'd be crazy not to take the higher figure. So that's why we're looking at paying less tax, not always good. So how do we change that? Well, before we go and look at how we increase our profit, let's have a look at what we can do with tax planning, because that is a key thing. We are entitled to minimize the amount of tax that we are legally required to pay. And there are ways that we can do that. And so we often do this exercise of tax planning. And effectively what we're doing in tax planning is reviewing the performance of your business with a view to making sure that you pay tax in the most efficient manner. That means that we can use things like, let's say, if you're operating through a trust. If you're operating through a trust, we might have discretion to distribute income to different family members or different people on different tax rates. And depending on their income, we can reduce the amount of or the proportion of tax paid on our income by distributing in a more effective manner. Now that decision needs to be made before 30 June each year and documented by the trustee. So there is an opportunity there, and that planning should be done at least a month before the end of the year, to make sure that you've got time to implement that strategy. You don't want to do it too early on because a lot can change in 3 months. We've seen that regularly, and particularly in our current situation, a lot has changed in 3 months. So we do need to exercise some caution there, but it's an exercise that should be done annually. Capital gains is another area that we look at managing, and this is where timing is important. So we work on a fixed end of financial year date of 30 June. So it's important that if we can defer a gain, capital gain, to the following financial year, we defer paying tax on that profit. So if we instead brought a gain in on, say, the 29th of June, we would be paying tax on that capital gain for the current year. So we're looking at 2020. If we made a capital profit on the 29th of June, that would go into our 2020 tax return. We'd pay tax in the immediate period. So that may be probably in March 2021. But if we instead disposed of the asset on, say, the 1st or 2nd of July, the capital gain would go into the 2021 tax return, which would then give us another 12 months to actually pay the tax. So sometimes our tax planning is not so much around paying less tax on income, but paying or deferring the tax until a later period. And if we are using things like discretionary trusts, we may be able to capitalise on changes in tax rates to get a better outcome in that point. So looking at deferring income, so timing is important. Similarly, we want to try and bring forward losses. So bring forward losses into the current year. And that could be through realising a capital loss, particularly if we've got capital income, capital gains income, but bringing forward losses and deferring income. So we can prepay, particularly for a small business. There are rules which allow you to prepay up to certain limits, and it's better to bring forward those expenditures. But bear in mind, when I say prepaying expenditure, only prepaying expenses that you were going to incur regardless. There's no point spending money that your business doesn't need to spend on things that are not going to produce any income for you. So look at bringing forward expenses. The other things, particularly if you are in a business of selling physical products and you're holding stock on hand, reviewing the value of your stock each year. Do you have stock that isn't actually saleable anymore? If it isn't saleable, then it should be written off as obsolete stock, and you're creating that reduction in taxable income. Bad debts is a topical one at the moment, with a lot of businesses struggling. It's a very realistic situation that some of your customers will be unable to pay their debts. So the decision should be made that you formally write off those debts as being bad, and bring that loss into the current tax year. Again, we're just realizing the event earlier. If we know it's inevitable, then we may as well bring forward the deduction and get the tax benefit from that unfortunate event. So why is tax holding your business back? So we're focusing too much on tax. We're focusing too much on tax. We should be focusing on other things. And why is that? Because we looked at it in the example. We looked at tax, the amount of tax you pay as a result of profit. It's the outcome. It's not what drives your business. What drives your business is sales and revenue, and doing that efficiently, making the most profit from each sales activity. So we talked about tax being an outcome, not a driver. It's a percentage of profit. So if we're only focusing on the end result, it's like trying to win a game of sport by looking at the scoreboard and not actually playing the game. So we see a lot of business owners fall into the trap of focusing on minimizing tax instead of actually focusing on making more profitable businesses. Focus on increasing your profit, maximize the after-tax profit. Okay, yes, you will pay more tax, but you will have more profit and more cash at your disposal as a result. And that's more important. So that's why we shouldn't focus on tax as much as we do. So we've all got these compliance obligations. We still have to do them. We can't avoid them. As I mentioned, if we avoid them, there are consequences, there's penalties involved, and it can impede your ability to actually do business. So there are a lot of compliance activities, not just tax. Here's quite a few. We're not going to spend a lot of time going through them because nobody likes really to look at these things. But these are a whole bunch of compliance activities that we have. So many of them are familiar. Now, there are two ways to look at this. One is to look at them as a major inconvenience and something that has to be done, and turn it into a big issue, complain about the system, fight the system, devote all your energies to finding ways to avoid having to pay tax and comply. So we could do that, but the time we spend doing that will detract from running our business. So instead, we like to look at these things as not so much inconveniences, but really as hygiene. So what do I mean by hygiene? It seems quite weird. Okay, nobody likes going to the dentist, especially not me. So when we say hygiene is that, just like brushing your teeth every day. You do it every day. It doesn't take a lot of activity. You do it properly. You look after your teeth. You avoid the big consequence. You avoid the painful and expensive trip to the dentist. So just like brushing your teeth is hygiene, you have to do it. If you don't, there are consequences. Your compliance activities should be the same. They should happen regularly, shouldn't take up a lot of time, happen efficiently, and when we do them well, we don't have consequences. So we can benefit from these activities. We just get them done. Yeah, let's not spend hours on the task. Let's get it done accurately, first time, every time, and using the least amount of resources that we need to with the least amount of effort. So using things like automation, having good systems in place, get that information done quickly with the least amount of effort, and focus instead on running your business, growing your business, being profitable. Now, the systems that we need to capture all the information for this compliance are generally part of your accounting system, or maybe your payroll system if you're using a separate payroll system, or your inventory system. All of those things are necessary to produce the compliance reports, your tax obligations. So we can actually use all of that information, though, to improve your business and your business processes. And why would we want to do that? Well, let's have a look. We're going to move along the journey. So we're moving on from tax. Instead, we're going to move to what I would like to focus on, and that is, where should your focus be? So we've said that you shouldn't be focusing on tax. Yeah, tax is a necessary evil, should be something that happens. Yes, minimize it, but let's focus on something more important. Now, we showed the difference of, yes, you pay more tax when there's higher profit. How do we get to that situation? Well, before we do, let's have a look at the big why. Now, this has become very popular for people to look at, but it's something we need to look at. So why does your business exist? What was your reason for going into business? It wasn't to minimize tax. It wasn't to pay less tax. Your reason for going into business was probably completely unrelated to tax. It might have been creating a better lifestyle, solving a problem, creating a new product, working with different people, working more flexible hours, working more profitably. All different reasons, but none of which are related to tax. Okay, so those are more important reasons. So let's focus our energies on those. Now, where we focus our energies, that's where all our effort goes. And when we focus our effort, we get better results. And where I'm leading to is that, we focus on improving our business. We focus on making more profit. We do end up paying more tax, but we have a lot more profit in the time. Now, coming back to having a focus on our business and doing the things that are important, we come back to, why did we go into business? And if we're meeting those reasons for why we went into business, we're going to be enjoying things a lot more. When you enjoy things, you put more energy into them. And often the results match the amount of energy and excitement that we put into these things. So we need to revisit why we went into business and focus on that. So now, this is moving on from where we are at in terms of tax. So we're looking at tax. We still have this obsession with tax. It's still there in the back of our mind. But we need to focus on why our business exists. Now, when things are hard, the temptation is instead not to look at our business, but it's to look at pain relief. How can we get help from outside to fix a problem? But we're not really interested in a fix. We just want some help at the time. And this is where we've become dependent on pain relief. Now, pain relief is in the form of things like tax incentives, stimulus package, government grants. They're all good things. Everybody likes to get money from the government to help them with their business. The problem we have is that they mask the real problems of what's going on in your business. They mask the issues, and often the focus is on the pain, not the cause. It's just like with a physical injury. The pain tells us there's an issue, but a lot of us focus on the pain and relieving the pain. We're not actually focusing on fixing the issue. Now, unfortunately, in hard times, there will be businesses that do not recover. And look, that's disappointing, and we feel for those people. But we need to move on. We need to look at what are the problems with our business and not focus on the dependence that we have on pain relief. You know, we spend a lot of time focusing on what government is going to do for us in terms of less tax, more money, more cash, support for our business. But there's something we can do, and that is to focus on our business. Now, where is the best place to start? How do we know where the problems are in our business? Often we look to self-diagnose, and this is something that's becoming more and more prevalent. Certainly with minor ailments, we might be tempted to go online and look up our symptoms and find out what they actually mean, and then look at a remedy of what we can do. And there's a temptation to do that always. But I'm going to get a better result if I go to a professional who can tell me exactly what is wrong and then give me a plan for what I need to do to fix, to recover from my illness, and to strengthen, or if it's a muscular thing, how I can strengthen my muscles to prevent a recurrence, but also give me more strength and more ability. So it's the same with business. We can self-diagnose. And look, yes, you can make some improvements that way. And to be fair, coming on this webinar today would be a way of getting some self-diagnosis. But the best results come from working with an experienced professional. So the first place we start is we do an assessment on your business, not just on the financial figures, but we look at some of your administration processes, your compliance processes, and your general health. Often those are the first things that we need to look at to fix, because we generally can't work on the bigger issues unless we fix the inefficiencies or the errors that are happening, or just the fact that you can't get the information quickly. So we do that assessment not just on the financials. Now, all businesses have weaknesses as well as strengths. So in doing this assessment, we would also identify not just the weaknesses. We'd look at the strengths. What are the strengths of your business? Well, let's use those as well, but let's help eliminate some of those weaknesses. And by eliminating the weaknesses, we may actually strengthen the strength. So we need to identify what is the issue or the issues in your business. We need to do that before we can work on growing your business. That's the first step. So the first step is really, I guess, first aid, that first step. Once we've identified that, once we put that in place, once we stop the hemorrhaging, it might be cash flow, then we can move forward. But the first step is this proper assessment, this business health check. That's the first step that you need to undertake. So look at where you're at now. So in doing that, one of the things you need to do is get very close to your numbers. You need to know what your numbers are. You need to know what they mean. What do they mean for your business? And how are they changing on a daily, weekly, monthly basis? What do they need to be? So you need to get very close to your numbers. Now, to do that, you will need to make sure that your accounting systems, your payroll systems, your inventory systems are kept up to date and are accurate. Otherwise, you're not going to have accurate, reliable, on-time information to assess how you're going. You're not going to be able to analyze your business unless you know what the numbers represent. The numbers tell you a story of how you are performing. And you're not going to realize how you're performing if you don't have accurate numbers. It'd be like, coming back to the sporting analogy, is trying to work out who won but nobody kept the score. Or they sort of kept the score, but they missed a few things. So we don't really know. And look, that's not a satisfactory outcome. So we need to get close to our numbers. And there is really no excuse for not doing that these days. We have accounting systems based in the cloud using data feeds, intelligent artificial intelligence, automatic rules to make these things more efficient, easier to do. So you should be able to have your information available. Then, once we have the information, we know the position, we know where you're at, we can identify the weaknesses. We then need to look at, how do we build a sustainable business? How do we move forward? So we could jump right in at this point and say, let's do some forecasts. Let's do a three-way forecast. That's fashionable at the moment, looking at profit, balance sheet, and cash. And yes, that's a great thing to do and should be done. But before we go to that stage and do the forecast, we need to look at, what do you have to do to build a sustainable business? Okay, so the focus is not on tax. The focus is not on compliance. We do need to know what your business exists for. Why are you in business? What are you trying to achieve? What is important to you? And we do need to know where you're at. We do need to have a good assessment of where your business is at right now. Otherwise, we're building a business on very weak foundations. We're building a house on the sand, and we don't want to do that. Nobody wants to spend their energy on building something that's going to fall apart when the first wave hits it. So we need to work out, how do we build a sustainable business? Okay, so we've done the assessment, we are identified what's working, what's strong in our business, what weaknesses we need to improve. So let's move forward. So where do we start? Well, let's remember some of the key things in what is a sustainable business. One of the big keys is cash flow. Managing cash flow is critically important. Good habits when times are good are sustainable when times are hard. When times are hard, yes, we focus more on cash flow, but we don't have the structure in place. And that's when we are struggling. That's when we need outside assistance to get through. That's when we have to inject money into the business. So let's build a structure where cash flow is strong. So what is cash? Cash flow is the difference between the money coming into your business from your sales and the money your business pays for its expenses. Expenses like wages, rent, materials, inventory, overheads, subscriptions, insurance, motor vehicle. Positive cash flow means that your cash coming in from your sales is much more than you're paying out for your business expenses. So cash is really important. It's not the same as profit. We need to be very clear on that. And why is that? Profit is sales less expenses. But you might not get paid on the same day that you make a sale. It's very common to have terms where your customer might pay you after 7 or 14 or 30 days. So your cash inflow doesn't match your sale. On the same way, your cash outflow may not match your expenses when you actually incur the expense. Your suppliers might actually give you terms, might be 7, 14, 30 days. Your employees won't give you terms. So you're going to have to pay them often before the sales are made, the revenue comes in. So we see this difference. Profit is necessary. You want to sell your product at a profit, but you also want to sell with good cash flow. So those profit and cash flow, both important. Cash flow is critical though. We need to manage our cash flow. If we're not selling profitably, we are not going to have a positive cash flow. So we need to address the profit as well as the cash flow. Now, cash flow and profit couple of things we can focus on here include getting more customers. Getting more customers of the right kind. We want customers that are going to pay us, that we're going to make a profit from, and that they're going to come back to us and give us repeat business. So we need to look at our marketing. Who are we marketing to? Are we marketing to the right customers? No point spending money on marketing strategies that aren't delivering the right kind of customer. We can look at reducing costs. And at the moment, that's a big area of focus, reducing costs. Are we paying for things we don't really need in our business? And this is where something like what I call subscription creep comes in. All of those small subscriptions to small pieces of software and tools that add up over time. They add up. Often the $20, $30 a month doesn't seem a lot, but when you combine 20 different tools, that's $600 a month. What if you're paying that amount per employee? You have 10 employees, that's $6,000 a month. How much is each employee actually using those tools? Are you getting value from them? So it's good to actually review the subscriptions and the outflows periodically. So what other areas of cost reduction are there in your business? And we're looking at costs that don't produce income. If it's a cost that's essential to producing income, we don't want to cut that because we still will need to supply to make the sale. But we want to get rid of costs that are not producing income. We also need to be more proactive in managing our debts that are owed to us, our debtors, or otherwise known as accounts receivable. Trade debtors, we need to be proactive in making sure our customers pay us on our terms. We need to be proactive. Now, at difficult times where there are cash flow shortages, where conditions like we're experiencing at the moment are terrible, we've had so many businesses forced to stop supply at the moment. There may be options to reduce cash going out, temporary in nature, rent reductions or lease variations. Maybe people working reduced hours. That may be an issue that you need to consider. Even if things are good, are you paying people to do a job where they're not productively engaged full-time? If you're paying a full-time person and they're only engaged 40% of the time, then 60% of that cost your business doesn't need. Or how can you use that person more engaged to produce more value, more profit for your business? Some things to consider there. When cash flow is tight, when conditions are unfavorable, we tend to focus a lot more on looking at timing of when we spend money, when we purchase stock, how much stock we're ordering, and how quickly it turns over. Now, the trap is that when things recover, when we're back to business as normal, good trading conditions, profitable, growing economies, we don't spend the same attention on monitoring when we are spending our cash, how much we are purchasing, how quickly we're turning that stock into a sale. We still need to focus. Those things need to be part of the daily, weekly, monthly routine of running your business. And that information you'll get from your accounting system, your compliance system, which produces all your tax reports. So coming back to use that information that has to be supplied for compliance purposes, use it to make better business decisions. Okay, so how can we use this quickly to get some good results, some quick results? What are some things we might want to focus on? Well, we talked about who are your more profitable customers. Well, we actually talked about getting more customers, but let's focus on not every customer is the right customer for your business. We only want profitable customers. So if you're marketing to the wrong type of customer, then you're not going to be making the right profit from those businesses. You need to get customers that match your product that you want to sell to, that will pay the price you need to pay, need them to pay. You have to have the right customer. Being consistent in delivery, you need to have a process in place so that things are done the same way by different people every time. The customer experience is the same no matter who makes the supply. And that's where your processes and your documentation come in. The more efficient you are, the more consistent, the less cost it takes to deliver the sale. So we're reviewing our costs, but we also need to review our processes. So reviewing pricing as well. A lot of business owners do not increase their prices. They do not do that. Now, we have inflation. It's pretty low at the moment. But generally, costs of living, cost of materials go up. Now, I hope they're not listening, but I have some suppliers that haven't put up their price for 10 years. They have not adjusted their pricing in 10 years. That means they have to be delivering more efficiently and at a lower cost to be making the same amount of profit. But the real value of their profit is reduced because of inflation. So we need to review our pricing regularly. You should review it on a regular basis, at least annually, maybe more often. Is it at a price level where you're making a profit? If it's not, then you need to review your pricing. It's well known that only about 20% of your customers will deliver 80% of your profits. So if your pricing needs to go up and you're going to lose some business, chances are you're going to be losing the business of your non-profitable customers. And that's not a bad thing. So have a look at that, review your pricing. Look at your marketing. Who are you marketing to improve your strategy, be more effective, more focused? And maybe it's a case of now's the time to introduce a new product or service, or a packaging of pricing, a package of services, a new model, and promote those. There's a couple of things. So just go and quickly delve into these in a bit more detail. Who are your most profitable customers? Well, how much profit is each customer making? And you should be able to pull this from your accounting system. How much profit? What percentage of sales go to a particular customer? Big customers are not always profitable. Now, there are some statistics out there, and I don't have the Australian ones at hand, but I believe that in some countries, 16% or something of businesses have a single customer. I've been involved in advising businesses where they've had a huge dependence on a large customer. We're talking more than 60% of revenue. The margins on that one big customer, though, were far less than what they were making on every other customer. But because they were a big customer, volume, they would do a lot more work, supply a lot more product, tighten their margins. And they were afraid to put up prices to that customer. In some cases, that big customer wasn't profitable at all. Actually, when they looked at all the extra stuff that was supplied to that customer, all the extra effort, all the extra work, that big customer didn't make a profit for the business. And scope creep. Well, here we go. We're coming back to not increasing our prices or being required to deliver more than what you agreed on for the price. So have a look at those things. Being consistent in delivery. Now, this is important. You get the same quality, the same efficiency, the same cost of supplying. And how do you do that? Well, through systemizing your processes, having an efficient process, a scalable process, one that can grow as your business grows, one that doesn't depend on you, the owner, to be involved in all the decisions, that every employee can make the same decision and it'll have the same outcome and the same customer experience and the same quality level. Reviewing pricing, we talked about. Costs go up. Why should you absorb it? Some customers will object. Well, how do you handle them? Communication. Talk to your customers. Explain why prices have gone up. Get rid of unprofitable customers. And what happens if you don't do this? Well, you make less profit. You might even not make a profit. Your cash flow reduces. And yes, you'll pay less tax because you're making less profit. And we don't want that to happen. So take time out and review your pricing. Make sure that you're marketing to the right customers, that your strategy tells them what they need to know, what you want them to know, what method are you using to tell them, how are you tracking if they're actually hearing, and is your marketing activity actually creating sales? If it's not creating sales, then it's not efficient use of your money. It's a cost that's not creating any value. And maybe you need to introduce some new products. McDonald's is the classic here, selling fries with hamburgers. We've all heard it. We're all sick of it, but it works. Selling products that go together. Maybe selling on a subscription basis, or selling something that sticks in. We call this a slave. So we look at coffee machines as a good example. So you have your coffee machines, but you have to buy a particular style of pod. Coffee pod. Now, once you've invested in the machine, you want to keep using those pods. So you've created a slave product. Can you do that in your business? Let's make it happen. So have a look at those quick things. Let's make them happen. But it's not just a case of making it happen. Let's think about what happens in planning. We might plan to do all these things. If we don't plan, though, that's planning to fail. We've heard that before. Failing to plan is planning to fail. Plan what your work is going to be and work through your plan. Work through your plan. And we're not just talking about business plans. We need action. You need to take action. You need an action plan. So you will have a plan for your business, but you need to have a plan of action. What do you want to achieve? Where do you want to be? Where are you now? What are the steps or actions you need to take now to get started? Not just a business plan, specific, deliberate, accountable actions that are aligned with your purpose, why your business exists, that are going to help you make more profit and have a stronger cash flow. So what do you need to be doing now, and what resources are you going to need? It's not enough to plan. You've actually got to have actions. You need to act. If you don't have actions, you may not even need to have a plan. What's the point? You've got to act. Without actions, it's like having the plans for a great house and never building it. Okay? Just like a ship, probably not a good example at the moment, just as somebody on a journey has a map, plans where they're going to go, your plan helps you decide where you want to go from where you are now and what you need to be doing on the way. What actions? You need the plan. Biggest issue with plans is this issue of failing to implement. Don't succumb to that. Only about 10% of plans get implemented. Commit to doing something. Don't commit to doing too much though, because it won't happen. We suggest 3 actions. What are the 3 things you're going to focus on right now? It's very common to come up with 60, 70 or more things you want to do. That's just too much. You can't focus on that many things. Focus on 3 things now. And for each of those things, make a plan. Who's going to do what? When will they do it by? What resources do they need? And how? How? How will we measure effectiveness? How will I be accountable? And how will I know I've been successful? So how will I know if it's working? How do I know if it's working? Well, you measure. You'll see the activity through your financial results, through your sales figures. You'll have activity that shows how many inquiries you got from your marketing activity because you're tracking it. How many of those inquiries turned into sales? How many of those sales were profitable? How much extra revenue, how much extra profit was generated from that activity? Measure. those activities. Measure the outcomes. One key to being more successful is that when there is more fun, more enjoyment, the results tend to be higher. So if there is a way that you can get your employees engaged, that you can be engaged, reward yourself for success, reward yourself, lift the fun, you'll lift the result. Now, I said before, there is a danger in self-diagnosis, a danger in self-medicating or self-healing, that you may not identify correctly, you may not come up with the best course of action. And that's where we come in. You know, you're experts in your business, but we're experts in advising businesses on how to produce great results. So we're here to help you to make sure that you identify where your business is at, what you need to do, and that you focus and implement the things you need to achieve a great business. How do you find out more? Stay connected with us. Connect with us, learn more. We provide information through articles, guides, videos, information to help you run your business. But to get the best result, get in touch with us and see how we can work with you to create a strong, growing, cash flow positive business. And at the same time, we'll help you minimize the tax, because nobody likes paying too much tax. But it won't be the focus of what we do with you. Our focus will be helping you grow a bigger, stronger, more profitable business.